Hi, I'm Suzanne Branton, Chief Investment Officer at CareSuper. And I'd like to take a moment to share how your super has performed over the financial year. Over the 2025-26 financial year, our diversified investment options delivered solid returns for members. Returns were supported by resilient global markets, even as inflation and higher interest rates remained part of the investment landscape. For super members invested in our balanced option, returns were in line with our long-term objective, delivering 7.73% to the period ending 30 June. Members in our retirement income options also saw strong outcomes over the financial year, with the balanced option delivering 8.25% for the same period. While short-term results can vary when it comes to your super, what matters most is consistency over time. And we're pleased that all our investment premixed options have delivered strong long-term performance over 10 years. While these results are strong, it hasn't been a straightforward year, with markets shaped by a few key forces. Inflation remained elevated across regions, which has meant some central banks have kept interest rates higher for longer. That has influenced everything from borrowing costs to company earnings and how different asset classes perform. We've also seen returns driven by a relatively narrow group of large global companies, particularly in artificial intelligence and technology. Returns from Australian shares were mixed, as 3 consecutive rate hikes from the Reserve Bank weighed heavily on parts of the local economy. At the same time, ongoing geopolitical tensions, particularly in the Middle East, caused a brief setback in markets and had a significant impact on oil and energy prices. While markets recovered quickly, these events reminded us that risks can emerge suddenly and affect investor sentiment. Diversification remains central to our approach, with a range of investments designed to respond differently as market conditions change. Over the year, growth assets like shares contributed to returns, while other parts of the portfolio, including credit and infrastructure, also delivered strong performance. Our more defensive asset classes, including alternatives, delivered quite strong returns during periods when traditional assets like bonds didn't perform as well. We achieved strong results across most asset classes, demonstrating the benefit of taking a diversified and selective approach to investing. We actively manage how much risk we're taking and where we're taking it, adjusting the portfolio as conditions evolve rather than relying on a set approach. This helps to deliver a smoother ride for members through different market conditions. Looking ahead, we expect the environment to remain dynamic, requiring agility and careful positioning to manage risks. If you are interested in hearing more about what we're expecting from markets moving forward, we encourage you to watch my conversation with Kat McPhee for more. Thank you for your trust in CareSuper.